Okay, well, I'm David Paul. I'm the Managing Director of VectorVest in the UK and take care of South Africa as well. I have been trading. I put on my first trade in October 1982. I was living in South Africa at the time. I was a professional rugby player at the time. I traded while working for De Beers until 1988, and I've been trading on my own ever since. I'll leave it up to you as to whether you think I've got 40 years experience or 1 year's experience 40 times over. But nevertheless, I've been trying to make a living out of markets for a very long time. Over the last 10 years, I've been helping people help the performance with VectorVest in the UK, in South Africa, and over the last year or so in the US as well. So that's my background. My preferred style is a swing trader. I have a long-term portfolio as well, but my preferred method of trading is with a swing trade, is as a swing trader, which is so that's what I'm going to try and talk about. The first share that I've got up, and the three picks that I'm talking about are three shares that I own. I've got 7 positions running in the American market at the moment. Some of them have been running for quite a long time, and these 3 I've in fact just got into in the last few days, a week or so. I had a great trade a few months ago on AMD, and those of you that have had a look at the stuff that the guys at VectorVest send out, I do a video every Friday or so, but a really good trade in AMD. I got out of that at 85, and I bought into it a couple of days ago. It's got impeccable VectorVest credentials. As Glenn says, the share is trading well above the VectorVest valuation, and if you were a very long-term buy and holder, that may worry you. But if we go across, we're not. If you go across a little bit, it's up nicely today. The relative value is 1.4. So the question I get asked most at VectorVest is, how can the relative value be 1.4 when the share price is trading at twice its value? So here's my explanation. If the price stays at 91 and the earnings come in as we anticipate, as you can see, the growth rate is 31%. If the earnings come in as we anticipate, then in some time over the next 3 years, the share will be significantly undervalued. So the share has gone a long way in the short term, but over that window of 3 years into the future that's used for the RV calculation, there's still plenty ahead. So the relative safety, which measures the safety and the predictability of the earnings at 1.32 is great. And the RT at 1.79 is saying that the short-term trend is strong. The EST is 1.54, and the comfort index, which Glenn explains, measures essentially the long-term trend at 1.78 is superb. Those of you, again, that have done that precision swing trading course that Jerry and I do, I have a search that finds those shares quite easily, and that's where these shares came from. Impeccable VectorVest fundamentals. And the one thing we haven't spoken about is the general market is rising. And for my swing trading, I use the DEW market timing system on VectorVest. And ladies and gentlemen, that market timing system has been up since the 6th of April. Dr. DeLito, the founder of VectorVest, he says that the most important thing to know is whether the market is rising or falling. Everything follows from that, and that's just such a cracking line because there was the upswing. Thank you, Glenn. That was the upswing on the 7th of April. It's sort of tattooed into my subconscious that, because I assure you, on the 7th of April, that took a great deal of testicular fortitude to buy the market down there because the world was falling apart. And my first job in the City of London, a lifetime ago, a very stroppy Scotsman was the desk head. And he used to say to us that when it's time to buy, you won't want to. And similarly, when it's time to sell, you won't want to. So the general market is rising. We've got a share with impeccable fundamentals, both in terms of safety of earnings and in terms of earnings growth itself. And that's a really, really good place to be, whether you're a long-term investor or whether you're a 3 to 5 day swing trader. So AMD looks good to me. So another share that I've got is Autodesk. And again, Autodesk trading above the VectorVest valuation. It's down a tad today, but not too bad. The RV is a whopping 1.48, and the relative safety a fair 1.18. RT above 1, and the VST a respectable 1.29, the CI at 1.48, and it should grow earnings at above 30% next year. 36%, and as you'll see in a second, I liked the technical formation, which we'll have a look at when we get to the charts in a second. So fundamentals not quite as good. RS is a little lower than AMD, but nevertheless very respectable VectorVest metrics. And then the last one is Pinterest. Now, Pinterest is me living on the wild side a little bit. It's trading a mile above the VectorVest valuation, a mile. And RV and RS are not good at all. However, the technical picture is exceptionally good. RT is 1.83, and the growth, it's on a buy recommendation, and we reckon it's going to go, or compound earnings, by 42% next year. So a technical play, and I believe, and the market believes, I think, that I like to phrase it like this, that the gold is still in the ground. The share's got a tremendous amount of potential, and that potential hasn't quite come to the books yet. So it's a much more aggressive trade than the other two that I put up. So two with great VectorVest fundamental metrics, one with just technical metrics. So Grant, if you could bring those charts up for us, sir. AMD. Now, maybe go to a 6 months chart if you wouldn't mind. That's AMD, folks, and this is my normal way of charting, in that I look at the price on a candle plot, sometimes on a bar plot, depending on how I'm feeling. I look in the window below price, I look at earnings per share growth. And that earnings per share growth, ladies and gentlemen, as Ben Graham said, Buffett's mentor, and happy birthday, Warren, you're 90, I believe. Earnings per share is the engine that drives the share price. And then down below that, volume. And I like to see markets breaking on increased volume. I traded it from the last breakout. Hard to see now as the chart gets rescaled, but I traded it the whole way up, and I traded that, and everybody knows about that. I put on two moving averages, and ladies and gentlemen, if you see some of my videos, you'll see that there's no moving averages on there. That's because if you've been looking at these averages for 35 years, you know where they are without putting them on the chart. So the 21 and the 55 moving average, they define a strong trend. And I like, the market likes to pull back into the zone between the two, between the 21 and the 55. And I call the area between the 21 and the 55 the zone. My old university professor used to say that you got to keep a level of mystique about your work, and I thought the zone sounded suitably mysterious. So it should pull back into that zone. As you can see, AMD didn't. I was waiting for it to pull back into the zone. It didn't. We've got a clear, fast trend. Now, if you put, Glenn, if you go to the left, if you in fact, there's the last top, you're right. And if you, in fact, put another horizontal, that's the last major top. And then if you go to the next bottom, which is, there was 3 down candles, you got it, sir. And that's the last bottom. Now, that is a fast trend. That is the trend speeding up. Now, I know many of you are thinking that that's naive, but I've made a heap of money out of that. 21's above the 55. It doesn't pull back to the last old top, and then it breaks up. And the fundamentals couldn't be better on the darn thing. VectorVest have earnings per share has been upgraded. That step if you see a step in earnings per share, that's normally money in the bank. As you see, it steps. That's money in the bank. So I believe the share is looking at $100 quite soon, maybe 110. I think I worked out a target. Now, how do I get out of them? Well, I do the same thing. My entry on this particular share was a break. I got in as it broke. Where you drew the last bottom, there was a green bar, and I got in just at that green bar, just there. Now, what I do is that I put a stop loss below the previous low plus a few ticks. Once I've made as much as I've risked, I sell half, and I get my stop loss to entry. And then I do my best to stay to hell out of the way and let the other half run. And I've been doing that forever. So if I buy a share at $10, folks, and the stop loss is at 9 to make the sums easy, I'm risking $1 per share. When the share moves to 11, I take off half and I bring the stop to entry. I then let the second half run to either a technical target or in this case, as long as it stays above that 21-day moving average, I do my best to stay well out of the darned way. Okay, so a small profit on half, and then I'm looking for a runner on the other half to make 3-4 times what I've risked, and that I've been doing quite successfully for a very long time. The last trade in AMD I got out at 85 and got back in the other day, and I think that looks quite good for more upside. Very, very happy with that indeed. Any comments?
I like the trade.
Glenn?
I like that the trade is hitting a new high today. Volume is pretty steady. Most recently pulled back a little bit, but pretty steady overall. Earnings per share, the engine that drives a stock faster. Good earnings, you can't beat that. New high, big bar, very little wick, clearly above the 21. I like the moving averages, and whether it's a 3 in the 8 or 21 or in a 51 or 55, whatever moving averages best fit you, use them. And I like the idea that if you've taken off a little bit and let the other half run, that 21 is a good spot overall to keep you and let the stock run. Absolutely, let the stock run, and if it pulls back, you already made your risk already. Now you're playing with the house's money. Now you're playing with the house's money. Correct. And just let it go. So yeah. I like big candle today, very little wick. So no bulls or bears pushing away. It's a solid good day. JD?
Yeah, same. Breaking out, new high. I actually see a little mini ascending triangle that's being broken to the upside. We've seen a few higher lows there over the last couple of weeks, but somewhat of a level of resistance. You got 2 touches there, right in that area where Glenn's pointing to. So that's an ascending triangle. Breakout today on higher volume. I mean, volume's at almost 50 million shares already. We still have 3 hours left. We're going to see a significant pop in volume today. Earnings per share, great. 2 moving averages that David's using, trending upward, separating from each other, indicating a strengthening trend. So everything looks really good.
All right, good pick. Let's go to your next one, which is ADSK. There you go, David.
Okay, ADSK, maybe if you go to a 6 months chart there, Glenn. Yeah, that's it. We've got earnings per share rising, and as you can see, as the price has moved up, volume has risen, and now we've got earnings per share is good. Glenn, could you just take earnings per share off, give us a little bit more screen space to sort of expand the price action? And maybe less volume so we can see the price. That's it, sir. Now, there's the 21 and the 55, and this is quite mysterious how the market pulls back into those levels. And if you could go right back to where the big takeoff was a few months ago, you can see a little bit further back, sir. Now, when just after the two moving averages crossed, yeah, you can see how it pulled back into that zone there twice, at least once or twice before it goes again. And that's always a really good place. Now, that happens over and over and over again at the first touch of those moving averages. Now, the market went sideways, and it went into a rectangular pattern. And I noticed the share. I like to buy shares at support. And if you draw a line underneath those three lows in there, yeah, just there, you got it, sir. And yeah, just there. I bought into it on one up candle after the low just there at the 55 moving average. And it went up quite nicely, and just about there, went up on reasonable volume. And the risk is next to nothing. Now, I was greatly influenced by the work of a technician by the name of Richard Wyckoff, who he also, Glenn, was before your time. He wrote all his work in the 1920s and the 1930s. And Wyckoff used to say that he buys at the extremes, and this is his word in his little book that I carried in my case for about 50 years until it fell apart. He says, I like to buy shares at the extreme, where the risk is least and the potential reward is the greatest. So I do my best to try and buy. If I see the shares up, rising in the 21s above the 55, if I see earnings per share is really, really strong, then I do my best to get in at the lows. And again, that's a lot easier to talk about than to do. And that's another setup that I teach in the Precision Swing Trading course. Mr. Wyckoff called it a spring. And those of you from the UK that are listening will know that I rabbit on about springs on every occasion because they've made me so much cash over the years. At the moment, the share is trading in what I call a multiple inside pattern, and it needs to break out. So if you're not in, folks, there is, you see, there's 3 days, the last 3 days, including today, are trading inside the candle 4 days ago, and that's called a multiple inside pattern. If I were getting into that, I would buy a break of the high of the doji. See the doji? No, that one. The one, no, 3 days before that one, Glenn. That one. That's what I call the mother bar, because it's in fact outside the range of the 3 days that came behind it. So I would in fact buy a high of that mother bar up there if I wasn't in already. My stop loss, I've taken off half. My stop loss is at entry, and with any luck, that's going to keep going. And it's on a buy recommendation on VectorVest. Everything is saying yes. I don't know what's going to happen next. I would give it a 70% probability of moving. I haven't looked at the S&P since we started this. The S&P was sitting slightly above 350 a moment ago. If that hangs in there and the general market keeps moving, then we should be okay here. So that I think has got lots and lots of legs. Now, if you see a market run sideways like that, technicians will in fact look at the flagpole to project the target, and the target is a long way up the park. You know, another $100 up the park, and this is a great little company. Okay, what's really interesting is that over the last 3 days, the price has gone sideways on virtually no volume. That's a very good sign. It means there's no sellers. Just in there. See how the market's pulled back on virtually no volume? And interesting, I looked at this intraday, and although there's volume on 3 days ago, there's a big volume bar. Most of that volume was actually done as the market rose there. not as the market falls. You can only actually see that if you actually go into the half-early bars. So I like it. But if you're not in, I would wait for a breakout of that mother bar. Okay.
I'm right on board with that. I'd like to see the stock break, but even at this particular point in time, it's not pulling down drastically. It's not moving up drastically. It's sort of muddling around. I'd like a breakout, but earnings per share looks good. Earnings per share looks good. And that could be a precursor to the stock's price to pull back up and start rocking and rolling. And we're not that much removed from the most recent 6-month high. So that's another good thing. It's still trading very close within the level of the most recent high. That's a good thing as well. What's the word I'm looking for? From a candlestick pattern or from a pattern, I don't see the flagpole, I don't see the pennant, I don't see none of that. But that's just me. Just like I can't see a cup and handle, nor can I see the head and shoulders. I have a hard time visually seeing those things on the graph. But I do like the sideways move without slamming down or rocketing up. This is a nice little pickup. Volume looks, earnings looks good. I just wait for some confirmation. JD?
Yeah, same, pull back to support, with the recent high there, stock breaking out. Anytime you get a breakout like that or a new high, look back historically. Is that new high, does that new high resulting in a breakout of some other pattern? So we're looking at resistance back in June, July, August. So the recent breakout is a breakout above resistance. A lot of times when you get kind of pulled down a little bit further, I'm looking more in the zone, keep going, right in that area there. Yeah, so you're looking at not at exact price point, but more of a zone. You got 1, 2, 3, 4 touches in that zone. Breakout recently. A lot of times what happens when you get a resistance breakout to the upside, you get a retest.
It retests support.
Yeah, it becomes support. We're getting a retest of that support. I like David's analysis where, we got 3 inside days, each day falling in between the range of of that first day there. So we got 3 inside days. Using the high of that unfilled red candle there would be perfect.
All right. Good pick, David. All right, let's go back. Let me undo the zoom here. Your last pick is Pinterest. As you said, Pinterest. Here, we call it Pinterest. So a little different. But Pinterest is the right way to say it.
We'll call it pins. We call it pins. Guys, there's the 21. First of all, it's a technical play. As you can see, the share was losing a heap of money until a few weeks ago. And the earnings per share went from negative to positive. So this is me living on the wild side. Clearly, somebody got a sniff of that in advance because, as you can see, the market gap before the earnings were reviewed. So somebody got a sniff of it, and I'm glad to see that the American market is as leaky as our market. So it gapped up, and the 21 and the 55, it pulled back into the zone a little bit, and volume, as you can see, it rose in huge volume. It's now pulling back on low volume. I'm maybe a little disappointed that the volume hasn't gone up a little bit today. I'm really happy as long as it's above 35. Now, if you could just blow it up maybe to 3 months, Glenn, that would be awesome, sir. There's the chart now. It went sideways. Now, this is one of my spring setups, but if you can draw a line under the lows, up to that low, yeah. You see how the market goes sideways, and then it gives a nice hammer type candle, and then it goes up, and it simply runs out of money up there, and it comes back and runs the stops underneath that hammer that I spoke about a second ago. And it doesn't have to go far below that low to in fact do that. In fact, if it makes a double bottom there, it will run the stops because of the spread. So, and then it turns there. Now that's what Mr. Wyckoff referred to as a spring. And it's been my bread and butter in markets for a very long time. I've struggled to teach it because people are looking for something much, much more complicated than it really is. So what we're looking for is a trend, and we're now looking for good fundamentals. These fundamentals are not great, but the growth fundamentals are turning, and it has run the stop losses. And that's really good because that's the smartest money getting in at a good level. Remember that if you're trading this thing with many, many millions of dollars, you can't press the little button like we can. You've in fact got to generate that liquidity from somewhere. So invariably the market will go down, run a whole football stadium full of stop losses so that the smartest money can get in at the best price. It's now starting to move up the page. It's my hope that the smartest money has been filled, that accumulation zone is over, and now we can have what Mr. Wyckoff would have called markup. It's doing its best to get up there. I'd be happy if there's a little bit more volume going into it, but it rose in really good volume. And if you can look back, Glenn, at the last little few swings, that swing that happened in the middle of June, although it doesn't look much now, in those upswings, you can see that volume was ticking up there down below. See there? And then in the next upswing, the same thing was happening. So if we were looking, there was plenty of evidence to suggest that this was moving. Now look at the 2 days before the gap. You can see that in those 2 days before the gap, the price was tight, but look at the volume. And the insiders can do one hell of a lot of funny things with price, but they struggle to manipulate volume. So if you understand volume, and there's nothing much more to it, that if price rises and rising volume, all is good. And if price pulls back on falling volume, also everything is good. So I would like to see this market break through that high on big volume. If you see that market breaking through that last high of a few days ago, that one, on a nice big bar up, then I think that thing can fly. So as long as it stays above 35, I think it's a buy. But it's not for the faint-hearted because the VectorVest fundamentals are not great, which means there's an awful lot of people betting on the potential of this company, and that potential, in fact, if it happens, great. If it doesn't happen, the share will get a sure and a swift haircut. So not for the faint-hearted, but I'm in. As my old rugby coach used to say, the ball is in, the game is on.
I like a couple of things. I like the bounce off that level, created a level of support. I like the bounce off, and I like that it's skimming right off of that moving average. It didn't pierce through that moving average, even here. That moving average is serving as a beautiful level of support, backed up by this level of support. So it's got two support narcissus all at the same time. And I like, I'm with you. I'm kind of surprised with past experiences that the volume is not rising up with that bounce. That's kind of interesting. It really is.
Yeah, I'm disappointed at that.
But you know, a graph is what has shown you in the past. And each one of these times, volume has risen, with the exception of this one. So we'll see what happens. I like this level of support as a good way to get out of the stock in case it gets that haircut. That might be a really good opportunity to pull whatever you got in off the table. But if it does rise, it's got the potential, the propensity. Put them together, the propensity. Anyway, it's got the good chance to break through that high. So that's what I think. JD?
Yeah, the only thing I'll say is the industry group that the stock is in. The stock itself, the company just recently turned a profit. They're in the e-commerce industry group. E-commerce is an emerging industry group, you know, since March, right? Since February, March, since Everybody's been required to stay home. Everybody's shopping from home. Looks like Pinterest is benefiting from that. Looking at the earnings announcement, looks like they blew their estimates out of the water. I like the pullback towards the 21-day moving average. So just in terms of the industry group, it's in a really good industry group, an emerging industry group. I would be concerned a little bit about volume as well, but that's kind of the only kind of red flag that I see here.
Good catch with the e-commerce, because since COVID-19, that is a happening industry. That really, because everybody and their mama, that's right, I said they mama. Everybody and their mama is shopping online. So,
Yeah.
All right. Thank you, Dr. David Paul. Thank you for your picks.